What's up everybody, Tom here with another video. In this video, we'll be discussing the latest stock market news happening right now. We'll also be discussing the lead up to the US election and what the stock market is telling us about the now and into the future, and our technical analysis levels together on the S&P 500, NASDAQ, Dow Jones, Dollar Index, Volatility Index, and of course gold. There's a whole bunch of things going on in the markets right now, and there's a lot of things to learn about yesterday's trading session. Stay tuned. So as we like to do on this channel, let's get straight into discussing yesterday's movements over the last 24 hours and what it means for us as traders and investors in the stock markets right now. Well, yesterday was not led by the FANG stocks. We did see some bullish buying coming through, but you'll notice it wasn't led by the likes of Microsoft, Apple, Google, Facebook, or Amazon. If we actually take a look at the overall sectors for the day, we had the normal kind of trap in the morning, the first hour of trade, every single time without fail. It's happened on Mondays. Buying pressure on the first hour, followed by some selling pressure throughout the day. Most notably, the NASDAQ was having the hardest sell on it. And then a little bit of a recovery into the day with some decent buying, I think, near the close. I mean, the NASDAQ almost made up all of the percentage back to being flat. So clearly Wall Street was manipulating the markets a little bit yesterday, making some decisions on what they were going to be getting into. If we take a look at the sectors overall, of course, people have been incredibly negative on energy. We saw a recovery now in energy. XLE, the sector itself, up 3.12%, and the technology sector still lagging behind, now down 0.14%, and the weakest sector of the day. The one we're really looking at right now, I think, is XLY, that's consumer discretionary. It's incredibly susceptible to, of course, this election from a perspective of when we get stimulus. Consumer discretionary requires stimulus. We've talked about how really since pretty much October 10th, this has been one of the weakest sectors in the market, and it will continue to be weak depending on what happens, of course, in the US election. So let's just quickly talk about the US election and whether in the long term, really, we have to worry about whichever party gets in. Do remember that historically, this is what's happened over time in terms of growth of dollars invested in the S&P 500 from 1926 to December 2019. It obviously looks a little bit different now because of the crisis, but overall, it's been very much a sea of really long-term bullish movement. It's not really paying to be a bear too much in these markets over the long period. I'm sure many of you are aware of that. We all know that when you're a bear in the markets, it's usually for a time period, not necessarily for a multi-year kind of selling pressure. So things still should be good and should look. So let's have a quick look at our expectations moving forward. So this actual data is taken from Pepperstone. We work with them a little bit, so I thought it would be good to just share some of the ideas Chris Weston had here about what happens after the different periods in the market. So we have here, of course, the blue wave scenario, the blue tide scenario, Trump 2.0 scenario, and of course, the full red Republican scenario. And these are some of the things that are expected to happen. Now, obviously a full blue wave. Let's just quickly discuss that really quickly here. If that happens, what is most likely going to happen to US equities? I think this is the one that I think I am most interested in. If that does happen and we see basically Biden, White House, House Democrats, Senate Democrats, etc., US equities should continue high. Now, we might even see a slight decline on equities first, but remember, this is probably going to be the scenario with the most amount of stimulus. Now, there are expectations upwards of $3 trillion worth of stimulus, so it's worthwhile considering that. Blue tide scenario may be more likely based on what we're seeing in the polls, but remember, never discount anything that's going on right now. Anything can happen, as we know. That would most likely mean a higher US dollar, potentially a initially lower US equity indices. I tend to agree with that. And overall, these types of things going on. It pretty much is seemed or expected from generally the market that even if Trump does win, we will not necessarily see, if he only wins by razor margins, a higher market. Some people are expecting a lower market as well in both these scenarios. And these are probably the more likely scenarios when it comes to what the pollsters are saying, the levels of getting it wrong. They both point to that usual statistic we've talked about now through the last week, which is a weaker market for the first month after the US election, followed by good bullish strength. And we still remain optimistic about the markets long term here. We're still thinking that yes, that next year is going to be a bullish period. So let's just quickly talk about some of the earnings that are coming through this week. PayPal had an earnings, and of course, while it's done really, really well, the stock price is not liking it as much. After hours, it was actually down. And just to remind you, things like Square and stuff are going to have to live up to some very good expectations, because we are seeing a period where now the stock market's saying, well, we're looking at other sectors due to the US election. PayPal does well, but doesn't do that well. Maybe we'll sell it down, similar to what we've seen in Apple. Quite a few fund managers worried about, of course, if Biden wins without the full wave of Congress. That's to be expected. We're also seeing what are we going to pick moving into potentially a Biden presidency. If it happens, I think this is the surefire bet. You might want to go check around. Things like firearms sectors have always done really, really, really well initially. Remember that first quarter sales has always been quite strong if the Democrats get in, and it's been pretty consistent, this type of play, so always worth considering. Quick reminder, earnings beat starter still incredibly high. We've still got 86% beats, 910 beats overall, and only 152 misses. This is a strong number for, of course, the long-term bullishness of the market. If we're getting dip corrective areas, you need to remember Q3 data looking pretty good right now. So let's get into the technical analysis and talk about what's happening in the markets around, of course, America. And overall, put call ratios, we're seeing a fairly strong put level to call, but we did have a very low number on Friday. So Friday actually was like a 1.19. We were seeing a lot of buying speculation, a lot of opening of calls. And if we get any of those kind of middle ground scenarios in the US election, potentially we do see a little bit of a sell-off in the markets. So here, I don't think there's that much to say about put call ratios right now. We're right in the middle of these kind of expected zones. We're not incredibly high and we're not incredibly low. Remember, always worthwhile having on your chart a 0.6 number. If you ever see 0.6, it's one of those times where it pays to be a bit of a contrarian. There's a lot less puts open to calls. What that will really mean is that Wall Street will start hunting all of those calls, and short term, you may see a corrective phase in the markets. Onto the VIX index. This is going to be the one I'm watching with you all on the live stream. Remember, if you're interested in finding out about the US election from a financial perspective, we'll be live streaming the US election, talking about the futures markets, talking about everything that's going on and following it all together. So the VIX here is hitting this 41. We saw a 37.1 yesterday, so it's kind of rejecting this zone. But this has been 3 times now that's rejected this 41 zone and then sold off. Remember, if the VIX increases into the election and on election day, if it spikes through this, it has a tendency to go to the next level, and the next level is 45. So if that happens, we may see some further selling, maybe gold, Bitcoin, things like that do quite well as in they go up against this kind of VIX increase or fear increase in the markets. Worthwhile having on your charts and having a 41 reading there. Onto the dollar index. Dollar index has been relatively strong. I think overall, we're still looking at a decent bullish kind of movement here in dollar index. Let's just talk about this level here, the 93, 85, 87 zone. We did see it break, coil around that level, nice bullish hammer, and now it's coming back down. I would not be surprised at all for the US dollar to continue to weaken and then for this level here to act as support. Like we said on the weekend analysis, we haven't touched a 20 exponential on a significant time frame for a while. This is a 4-hour chart, and a 20 exponential moving average should be touched and the market should come back to this zone. I would expect some form of support around here, but this is going to be a very volatile pair around election day. US dollar index, one to watch this week for sure. So now let's start talking about the indices, and we'll start here with the NASDAQ. So before we get into the S&P 500 and Dow, let's take a look at how the NASDAQ's been trading. I think the NASDAQ has been one of the best indices to trade at the moment, and that's because the 200-point increments have been so great, which we'll talk about again right now, but also this 20 exponential moving average. Look how it's held price on this decline. Amazing holds here. We've got multiple, and whenever you're trading with moving averages, remember if we have a 1 and we have a 2, as in 2 respects of that dynamic moving average on whatever time frame it is, usually the 3rd and the 4th and the 5th and the 6th are all very good opportunities statistically, especially at the correct zones. So yesterday what we saw is we saw this 11.2 area being tested from a support and then of course a resistance standpoint. We also had the 20 exponential moving average, role reversal, all of those things. So it's a very nice strong sell zone. It was. So again, the market came down, hit that 11,000, basically went a little bit lower and then started bulling off. And that's again to be expected. I think that this has been just one of the easier types of trades. We'll pretty much stick with the normal plan. If the market goes above the 11.2, expect strength into, of course, where the 11.4 in that case. If the market continues down and gets below these previous lows over here, just under 11,000, where do we expect it to go? The 10.8, the previous lows over here back in, of course, September, when the market was having its corrective phase. So I think the Nasdaq's become one of the easiest trades at the moment in the markets. So have a quick look at the SPX. So always do your analysis, and when you're putting pivots on charts, remember, use the SPX, the real market, whenever possible. So here we have the new month, the new pivots, and guys, what does that tell us? It tells us that we should be looking at these critical levels and lining them up with other things in the markets. So the S1 has opened at around a 31.50, the S2 around a 30.34, the central pivot 33.52, which will probably act as some kind of resistance if the market comes up and hits it now. And then of course the R1 at 34.70 zone. So almost near those kind of previous highs. Now it's interacted very well with these zones before. If you notice here, the S1 was reached at the 3200 and then straight bounced off it. And then it found, of course, resistance at the R1 as well the next month. So always do pay attention to these zones. One thing I'm instantly noticing here, we're on a weekly chart of the SPX. Notice that we have a 50 exponential moving average right around this 31.54 level. So if the market's to come down, potentially there will be some buying pressure here from bigger traders having a look at getting value. We also have an S2 right around that other key zone, 3,034, right near that 3,000. So we've been kind of saying if the market does make a new low after the election, that it could potentially further sell off. And where will that sell-off probably occur to? One of these two levels makes the most amount of sense. 3,030 or of course that 3,150 level. Both of these make a lot of sense and the central pivots are certainly lining up with that. Let's just talk about, of course, consumer discretionary again. I want to talk about Amazon because Amazon is really flailing right now. It's had its report. The report was pretty good. It looked pretty good on paper. But now we're coming back and testing key zones before the US election. We basically saw a 3,000 aftermarket close here. We obviously almost had a break close below this 29.50 zone. It almost reached it yesterday. Very key support zone, and watch this space because what happens if Amazon continues to decline? Then all of a sudden we could be at a 2,600. It's worthwhile leaving that on your charts and considering that. Similar with AMD, we're seeing a very weak market on AMD right now and a very critical point of support. If the market can't hold this level, and this is certainly where buyers should be in AMD right now, we're seeing a giant head and shoulders here with the capability and possibility of going back down and testing these 60 zones. There's not much market structure here on the left-hand side, something to note and be always looking at in the markets. US 30 or Dow, still really that double top play. Having a look at this, it's back at these 27,000 now. It was kind of hovering between the 26.5 and the 27. This point here, it would need to probably start turning around. This is a critical point for the Dow. If this is going to work out, as in the double top here, with the previous kind of peaks and intervening trough here, it needs to find some kind of resistance right now. 2050 cross has been confirmed. Everything's looking negative, but again, the US election, depending on the outcome, is going to be very, very, very crazy for this particular pair, and we're not going to use the Dow as the lead right now. Onto silver. Silver continues to do its thing. It's hovering just around 2407. Previous supports, you'll notice, are acting as some form of resistance around this zone. This is probably more the level that you don't want to be in silver either way, but it is looking relatively bullish. If we have a look at gold, gold's back at that key critical zone. Let's put a horizontal here on the lines and just notice this. Multiple supports. It was that key critical break we talked about previously is now being tested. So 1896 to 1900, expect some resistance similar to what we're seeing in silver on gold. And if it breaks and closes above